There we
Okay,
go.
there it is.
Good morning.
Hey, good morning, everybody, and welcome to the Victoria Real Estate Show. It is October 9th. It is 9:30. We're just starting out. And we don't have Jean with us because Jean is halfway, actually full way across the country at a conference for her Remax, her company Remax. So we miss Jane today, but she's busy glad handing and meeting her colleagues and setting up referral networks and doing what she does best. How are you doing,
Yes,
Jen?
I'm doing great. Yeah, it definitely feels like fall is here and got my sweater on and yeah.
Yeah, yeah. I think I might have to put it on to get out the door today, but for now, I'm just staying comfortable inside. So, how many days do you lately do you find you're just not even leaving the house because I work from home, so
I prefer to go into the office,
that's right.
honestly.
Yeah.
Yeah, so funny enough, this morning, and I'll apologize in advance, we're needing our oven repaired, and I'm expecting the repair guy any minute, and the dogs go crazy with the noise. So I'll
Okay.
have the mute
Well,
button
I
handy
don't.
just in case
I
that happens.
I don't think people have come to expect full professionalism from this show. So
There we go. A little bit
this
of
is
entertainment.
very this is very real. This is very real real estate
Yes,
and
yes.
mortgage. So okay. So what are we talking about today?
Yeah, well, so I'd like to dive into a topic that's kind of been quietly building under the surface, which is
Ooh.
rising mortgage delinquencies across Canada, and kind
Okay.
of where,
Okay.
yeah, where what that means for us here in BC.
You trying to scare
Um,
our audience?
yeah, yeah, yeah. So yeah, I can dive right into it here. So
Sure. Yeah.
when we
So
look at,
let's get into there.
yeah, yeah, across Canada, the delinquency rate for mortgages, which is meaning 90 days overdue,
Hmm.
um, is low, which below 1%, but we're seeing movement upwards.
Okay.
So when we look at this chart here, you can see back it was pretty or higher in 2020, 2021, and that's when we were going through COVID. And then it really dropped off, and now we're starting to see a rise again.
Okay. Maybe you can explain this chart to me because I'm looking at the numbers on the left of it and I'm a little confused because it starts at point zero or is it what are these numbers on the left?
Point
Because it says
zero
it.
seven, yeah,
Okay.
percent of
Okay.
mortgages in BC
Hmm.
are 90 days past due.
Okay. And then I'm seeing 0.19% over here on the chart, but this is a chart that came from a source, right? This was
Yes,
okay.
through Equifax.
Okay. Okay. Through Equifax. So they're saying
Yeah.
it's 0.19. I'm sorry, folks. I just want to clarify because I'm seeing also on the left, it looks like it's more like 0.12, but it's 0.19 is the numbers were.
Yes.
Yeah.
Yeah. Oh,
Okay. Okay.
I see what you're
You see
saying
what I'm
there.
saying? Yeah.
Yeah, the 0.19 is way up there.
If you ignore the numbers and
Yes.
let's look at the shape of this graph, okay? Because that is correct. And what
We're
we
seeing
know
an
is
increase. Yeah.
yes. And
Yeah, we are seeing an increase.
those numbers from early 2020, from 2020, 2021, those were COVID numbers.
Yeah. Yeah. So that's the last time there was a lot of delinquencies
Hmm.
in the mortgage world. Usually, and for the last several years, BC is usually of the lowest delinquency rates in the country.
Hmm.
But like I mentioned in here in 2025, we're seeing that number edging up to 0.19%. Um, it's a small increase, but noticeable because it's telling us that some households are really starting to feel the pinch from rising living costs.
Hmm.
Their mortgages have come up for renewal.
Right.
So they're into that higher interest rate, and their overall higher debt loads are higher.
And we still have, and we don't have a slide for this, but there is if you were to imagine a slide, I know that we've mentioned this before, there's a lot of renewals coming up soon. So a lot of people are going to be hitting a new mortgage. They're going to be getting new mortgages. They're going to be renewing at much higher rates. So that's going to put a lot more pressure on this graph, because
Yes,
that suggests that this graph is early days on rising.
that's right. Yeah,
Okay.
yeah.
Okay.
Looking back with my source for the data with Equifax Canada's Q2, and actually that could be why, because it's from second quarter in 2025, showing BC at 0.19, and Ontario's delinquency rate has climbed up to 0.27.
Okay. Well, so what is considered a high delinquency rate for the lenders? What are they hoping? I mean, obviously, you don't want to see. I would say even 1% would be considered really, really high, wouldn't it?
Yes, yes, yeah. That was what I was going to say. I mean, I'm not. I would say 1% would be pretty
Okay.
high and a concern. This is sort of just starting to come out into the news that we're seeing this increase in mortgage delinquencies, because that was
There's
always a bit of a argument we had with this stress test that we're making everybody
right.
qualify under, when the delinquency rates have been so low for so long. Why are we making everybody qualify at this higher rate when we just don't have an issue with mortgage delinquencies?
I guess the point would be, though, so that we don't get there to that point. It keeps us on this side of the fence of delinquencies as opposed to that, by having a qualifying rate.
Yes. Yeah. Yeah. You could
Yeah.
definitely, that's a good argument for sure.
Yeah.
So, and I was thinking about it when we were exploring this topic too. I mean, when I look back, it would be before COVID. It wasn't, I would say regularly, but there was a lot more interest and more foreclosure properties available
Right.
on the market. And like, are you seeing many foreclosures out there right now, or have you noticed an increase?
I have not noticed an increase, because I think, I mean, we're talking a pretty small, we've used this analogy before and it makes you laugh, but like the turtle in the pot doesn't notice when the heat is turned on.
Yes.
Um, there's been a small uptick, maybe, I have noticed. What I would say is, I'd noticed a while back that I wasn't noticing any foreclosures, or hadn't seen any for quite some time. Earlier in my career, I saw quite a few of them. And
Right.
then every once in a while lately, I've seen, oh, there's a foreclosure. It's not like I'm seeing a lot of them, but I'm
Hmm.
seeing a foreclosure from, here and there. So I guess the question, so we might be, coming into a time of more foreclosures. Do you happen to know, and maybe you can just off the top of your head, I know people talk about, when they talk about a time when people were walking away from their homes here in BC, here in Canada, was during the 1980s, early 80s, when the interest rates went to, 18+%. What do you know, or do you have any inclination? Maybe we could do some Google search and get back to people if somebody wants to Google and put it into the chat. What the delinquency rate was at that point?
I don't know,
Yeah.
but yeah, it would have been much higher, because at that time there was the talk of, people turning their keys into their bank and that kind of thing.
Hmm.
So yeah,
Right.
much different times for sure.
Same with
Um,
2008, that housing crash in the States. That's one thing
yeah,
I did see too when we talked about this topic. I did, look up mortgage defaults, and in the States, the same news is coming out. We are not alone
yes,
in this in Canada. So the
yeah,
news in the States is also, there's a rise in delinquencies, and they're very different in the States how they deal with mortgages, or sorry, with foreclosures. So I want to touch on that at some point here, just to
that
help
would be
people
interesting.
highlight, because there's a lot of misconceptions about foreclosures here in BC.
And that's a good point too. I mean, we're definitely seeing an uptick in the arrears, but
Hmm.
our process here in Canada to get to actually having your mortgage foreclosed on, it's not a short process. It's a
No.
pretty long process. But
Yes. Yeah.
and our market here in Victoria is historically very stable, and people would have potentially stronger equity positions with their properties. But
I feel like, the stretch takes a lot longer to get to the point of breaking in
yes,
Victoria. At some point, if things get bad enough, we end up breaking, right? We
mm-hmm.
end up with a system that breaks down, and we end up with a lot of foreclosures and people who can't afford their homes. But I think we are more insulated. There's more room. There's more buffer. I guess if you could call it a shock. The shocks in the car, the system has better shocks.
Yeah, yeah,
Simply because values hold here better.
yeah, yeah.
Um,
People want to live here.
yeah. So I'll quickly, in the States, as I understand it, if you go into arrears on your mortgage, the bank can essentially take back the house. And I was reading briefly about something called zombie foreclosures, where people are actually, getting a notice from the bank to say, the bank's going to be taking this back. And maybe they still even have time to start paying back the home, but they know they can't. So they just actually leave the keys, walk away, and leave the home vacant. And the home just is, at risk of vagrancies and water leaks and all
Mm-hmm.
kinds of problems. But people are just realizing they're just going to lose their homes, they're going to go. But in Canada here, or at least in BC, as you said, there's quite a process to a foreclosure. If you miss a couple payments, the bank actually has to go to court, apply for an order, get that order to have conduct of sale. They're not actually going to own the house. All they're getting is permission to sell the house. And in the
Right.
meantime, at any point throughout that process, including when the sale goes to court, the owner has the chance to buy back the house, has the chance to get back into a good position.
Mm-hmm.
And I've seen that happen. One of my first transactions in my real estate career was a home that was under foreclosure, and the owner did actually go to court and they were able to come up with alternate financing and repay off the current mortgage and get alternate financing and get themselves back into quote, square,
Ah, okay.
which is
Well,
rare.
yeah, yes. Purchasing a foreclosed property definitely comes with it some risks as well.
Yes.
I do know in the few transactions that I've done in the past, that's a big risk there. Always an appraisal is always required on the property, because sometimes the current owners can be a little bit disgruntled, and can be banging
Right.
into the wall, doing causing damage to the property, because they're frustrated. So
So you're absolutely right. And so speaking of recent experiences with foreclosures, I had a client who she's got a home for sale, or she will need to sell. She inquires about properties that catch her eye, and foreclosure properties, they're not always priced at fire sale pricing, but they are they do need to sell eventually. And people see the word foreclosure, they think there might be
good deal.
some advantage to that.
Hmm.
So I have to explain to my clients repeatedly, number one, foreclosure, when you make your offer on the property, you're not guaranteed to get it. You need to make your offer. You need to remove all your conditions, put your
Hmm.
put your deposit down, and then you are waiting for for now this offer to go to court for court approval. And at court, when it's waiting for court approval, anyone else who has an interest in that property can bring a competing offer, as long as that offer matches most of the same terms, let's say the same dates, deposit amounts, and so forth as accepted, but is a higher number. And there's some variations to this, I'm sure. The justice always has the discretion to make exceptions, but generally speaking, this property will sell to the highest bidder, because the judge is going to be considering what's in the best interest of the original owner and not just take any old offer. So again, a foreclosure could come up and you might even get the bank to accept a fire sale price, but the judge will probably deny that, because they're going to say, well, it was only on market a day, and there was no other anyway, there's lots of different aspects to it. So if you have to be out of your home and into a new home at a certain date, and you're trying to buy a foreclosure, you don't even know about that until months after you've made your offer when it goes to court, and you could be stuck with no place to go. You could also, as you said, be dealing with disgruntled sellers who say, I don't want to move. The home is sold as is, where is. You're really just getting the land. So the house could burn down and you're still buying it, which makes it hard for a lender to really be super happy about this. Maybe you can speak to that. They could remove all the fittings and fixtures, all the appliances. There's no guarantees whatsoever in a foreclosure purchase.
Right.
So they are risky.
Exactly.
And
there's a requirement, or when clients have inquired in the past about foreclosure properties, there's a requirement to put money out up front to get all these checks done with no guarantee that you're getting the property.
Exactly. So you go through your building inspection, you pay for your building inspection, you get your appraisal, you put all these ducks in a row, and even line up movers, let's say, for your moving day. But until it goes to court and is actually approved by the justice, you're not done.
Yes. And so that court date, we don't know about the court date. And then all of a sudden, if you are the approved buyer, you're taking possession in 10 days. It's usually 10 days after.
Right.
So things all of a sudden then move very fast. So if you've got that flexibility and are willing to do it, then it can be a great opportunity.
It can work.
But yeah.
So in a market where you're that one foreclosure, because, and there's many reasons for foreclosure or, getting yourself into financial distress that have nothing to do with the market. I mean, you could be going through divorce or separation and things are just falling apart in your personal world. And so the payments and the two people paying this mortgage are no longer both paying, or what have you. You could be, in the States, it could be due to medical expenses, but not so much here. But increased household debt, rising interest rates, poor financial management, of course, missed mortgage payments are just, that's going to do it.
Yeah.
So there's lots of reasons for it, but I guess my point, and I'm sorry to go on a bit of a tangent here, but my point is, if you are in a market that is like we had just throughout COVID, where it's really hot, and you go into foreclosure, your property could still go above asking price, sell right away. You've got 10 people making unconditional offers for it at court, and it's not going to harm you. But when let's do the other extreme here, and right now it's 0.19% delinquency rate. Let's say it's a 2% or 5% delinquency rate, something crazy. Then you've got a whole bunch of properties coming on market, and also maybe in a market where nobody, because the whole economy is not doing well, nobody's actually buying any homes.
Right.
That's where you're going to find those good deals in a foreclosure, because nobody's buying anything, and then maybe you can get a good deal on one of many, and you might even find a home. I remember talking to someone buying a home foreclosure years ago that the owners have walked away from and left all their belongings, and you're getting everything in there.
Right. Yeah.
But that's the other side of the extreme.
Yes. And so with the potential increase in foreclosures, we're also looking at a huge increase in unemployment rates, and the economy is not in a good state. What will be interesting to see, specific in the BC market, we've got a lot of government employees that are on strike right now, and that could have an effect as well. So it'll be interesting to see what happens. This is kind of just a new topic here that we'll have to continue monitoring.
Let's wrap it up with you telling our listeners, our watchers, if you are at risk of, being delinquent on your mortgage, what are the things you can do to get ahead of that? What are the things you can do to help your position with the bank?
I would say first, before you are missing a mortgage payment, reach out to your mortgage broker or your bank. as there are programs to help with financial hardship. So if your
Right.
mortgage is insured with CMHC, they do have a program to help with if you are in you have to prove that you're in a financial hardship situation, but
Mm-hmm.
being on strike, for example,
Right.
that's something, your income is drastically reduced. So the goal is we want to get on top of it before it's up where your mortgage is actually in arrears, to
Right.
look at options. Can we utilize equity? Can we refinance to reduce that payment? Can you just skip a few mortgage payments and will that get you ahead? And what is
Mm-hmm.
it that's causing, um, is it cash flow issues or, yeah. So just talking it through,
Mm-hmm.
and don't be embarrassed. I mean,
Right.
you're not alone. We're
No,
here to help.
this is not a head in the sand situation where you just
Yes.
ignore it and it's going to go away. And if you can be in communication with your lender, let them know, give them a heads up. That just puts you on such a much higher pedestal than, the other people that are just not making their payments and they have to go chase them. So
Mm-hmm.
already you've put yourself in a position of them being able to do something to help you.
Yeah.
I found in this life, if you ask for help, you'll often get it, but only
Yes.
if you ask, right?
But if you bury your head and pretend you don't have a problem, people aren't going to necessarily be
That's right.
as willing to help. So
That's
yeah,
right. Okay.
yeah,
Well, thanks for this topic, and I think that was great. And
good
if anyone
chat.
actually, again, has questions, please chime in.
Yeah,
So, comments. So we got Jane says hello. I'm back, and hi from Halifax. She is back tomorrow. So that's our intrepid Jane traveling the world to Halifax. And I've actually seen a lot of my colleagues posting on social media about their trip to Halifax. All my Remax colleagues. Okay,
nice.
so Jen, you've do you want to give us just a general mortgage update before we go on to the stats, and
Yeah,
then we'll do the stats and wrap it up? You're good?
yeah. I mean, nothing too exciting. We're definitely seeing sort of 3-year and 5-year fixed rates are on par. Like they're about the same right now, which is interesting. Um, Variable rates are becoming a little bit more attractive. People are asking about variable rates now that we're seeing rates come down on the
Okay.
variable rate side. So,
Okay.
yeah,
All right. Thank you.
awesome.
All right. So we'll just quickly go through our weekly stats. I got to put my glasses back on for this. And so we had in this last week 326 new properties listed versus 318 the week before. We had 182 properties go pending versus 147 the week before. 209 price decreases. That's a pretty high number, I would say, for number of price decreases. And in fact, if we often do a ratio of the new listings to the pendings, and we measure that. But I'm looking at now thinking about this new listing to price decrease ratio, and it's pretty high. When you look at 326 new listings and 209 price decreases, there's quite a few people decreasing their price in order to get sold. 146 properties expired unsold. Also, this is also, I mean, it's similar to the week before, but I can remember a time when we saw very few properties expiring because they would sell during the listing cycle. So
Right.
that's all interesting to note. And as we go into the winter and the slower time, we should probably see these numbers in fact increasing. Although we're waiting for Jen to tell us that the interest rates have come down more, and then buyers come back to the table.
Yes.
So these are the ratios, the list to sell ratio that I was mentioning, 55.83 this week versus 46.23 the week before. And now, so far this month of October, as of Monday, there were 92 unconditional sales. And we compare that to the full month, because we're always tracking versus the full month of the year before. So full month, 571 net unconditional sales. So a week in, 92, project that out another week, 3 weeks, and would probably be a little low for sales. New listings, 223 have come on the market. There were 1,441 the year before. We will probably see more listings coming on after Thanksgiving. People tend to sort of hold off for the week. So we'll see. And then total active listings, we're still in that 3,600 range, and versus 3,362 the year before. So I think that is it for our show today. Thank you to anyone who was watching and listening. And we do appreciate your feedback. We would love it if you would give us a like, subscribe, and watch us again sometime. Comment and engage with us because we love that engagement. And please share if you know someone who is talking about foreclosures recently or is curious about or wants to know something more about that. And of course, they can always reach out directly to Jen or I or Jane for more information. So if you want to reach me, I'm at 250-360-6106. Email is info@andrewplank.com. And my website is andrewplank.com. And Jen.
Yeah, I am at 250-217-4925. Email is jen@jenlow.ca, and my website is jenlow.ca.
Excellent. Do you want to take Jane's?
Sure. Jane is at 250-744-0775. Email jane@briarhillgroup.com. Website briarhillgroup.com, and Instagram is realtorteacher_remax_Victoria.
There you go. Okay, well, thanks everybody for joining us today, and we will see you again next week. Really appreciate you taking the time to watch and listen. Good to see you, Jen. We'll see you next week.
Good to see you as well. Bye, everyone.
Okay. Bye, everybody.